Hello and welcome from me, Philip Nothard and Curtis Hutchinson to this Motor Trade Radio interview podcast. Many thanks for joining us for this, the first of this year's special interview series themed around sharing insight and best practices across the car retailing community. Over the coming weeks and months we'll bring you regular interviews with industry leaders and key influencers.
Today, we're delighted to welcome to the podcast Steve Le Bas, Head of Motor Retail at BDO. Steve's an audit partner at BDO and has advised clients in the motor retail sector for over 15 years. Steve's also been the driving force behind the annual BDO Motor 150 report since its launch back in 2009 at the time of the recession. And what differentiates the 150 report is that it takes an aggregate view of the top performing franchise groups in the UK. So we're delighted to welcome Steve today to discuss the newly published report and share BDO's predictions for 2021. So welcome to the Motor Trade Radio podcast, Steve.
Great. Thanks, Curtis and Philip. Great to be on the show today.
I mean, welcome. I mean, we've obviously had you on. We've mentioned your insight a number of times over the years on the podcast, and I know you and Curtis go way back from the old motortrader.com days with Curtis there. But again, welcome to the show, and I'm glad that you've been a listener as well, Steve, to the show, which is great news. So. Again, just to talking about the report there, can you just start by giving the listeners some sort of context around the Motor 150 report? What's the thinking behind it, how it's compiled, and how does it help us understand the health and well-being of the franchise dealer network?
Yeah, thanks, Philip. So, as Curtis mentioned, we started it back in 2009, so just over 10 years ago. And I think the thinking at that time was we thought it'd be of interest not only to us as sort of leading accountants into the sector, but also to the wider retail motor sector as well. And I think the differentiator for our Motor 150 report is it's based on annual audited accounts rather than potentially being estimates from financial directors and managing directors. So it's based on actual audited signed off accounts. And I think what that then gives you, what we then do is add up all those 150 sets of accounts to give a wider holistic view of what to what the motor retail UK looks like within the UK for that given year. And of that, we can then analyse trends and what have you. I think what is interesting to note, if you go back to the depths of sort of 2009, 2008, which obviously were the comparative, 2008, the revenue for the Motor 150 group was just over 36 billion. And if everyone can remember back to the 2008, it was in the height of recession, the return on sales was actually a negative 0.55%, partly as a result of the banking crisis. You roll forward to our latest report in 2019, the revenue is up to almost £70 billion. So it's almost doubled in that 10-11 year period, whilst return on sales in the 2019 or 2020 report have increased to 0.53%. I think when you look at that 12-year period, actually the return on sales averages out to just over 1.1% over that last 10-11 year period. So I think it gives us and hopefully the sector really good insight to what Motors UK looks like within the largest 150 dealers. And that at the minute ranges from your Sytner being obviously the largest group in the 150 population to probably the groups at the 150 level, which probably turn over north of about 50-60 million pounds. So again, a really good range of motor group sizes and whether listed or privately owned businesses.
Now, Steve, turning to the latest report, while you look at the combined 2019-2020 financial years of, as you say, the top 150 dealer groups, your report is more about lessons learned and trends set for 2021. So before we look at 2021, though, can you just take us briefly through 2019 to 2020 and the position the sector was in and the direction in which it was heading before COVID struck?
Yeah, Curtis. So So I think if people have seen the reports, they'll see actually it was a relatively flat year, probably in line with where registrations were. So revenue, as I alluded to earlier, stayed around about £69 billion for the period. And actually, the return on sales reduced down to 0.53% from a 0.82% in the previous year. But actually, if you take out the significant shift in profitability for Pendragon and Lookers, actually it was probably about the same sort of level in terms of return on sales. So my take, looking back at 2019-20, was, again, it was a year of hard work for everyone in the sector. There was still good money to be made for those dealers that have the best processes and controls. But again, the common use phrase is return on sales, isn't it, in the sector?
Yeah.
And I think, it still continued to be more of return on effort in 2019 and 2020. And if anything, if I look back to what I was saying probably this time last year, before COVID, I would say 1920 was probably a holding year, or certainly 19 was a holding year. Coming then into 12 months ago, I was forecasting, and BDO were forecasting, I thought it'd be a strong return to growth in 2020, probably from about March, April time. And we would see the whole industry really start to motor ahead again. Obviously, then COVID came in and took that away right in the midst of the registration month. I think it's also interesting to note, and we've not put it in the current year report, but we looked at registrations, and I think, Curtis, we might have discussed it before, but we've looked at registrations going back almost to 1960. And very much in terms of registrations, it seems to be almost an 8-year cycle. So you have 8 years of growth of new registrations, and then you have a bit of a dip, and then you have a growth again for 8 years. And believe it or not, 2008, 2009, obviously there was the banking crisis, but that was the end of an 8-year growth. And then, to my mind, we were just about to start in 2020 that growth period again after sort of 17, 18, 19
Yeah.
small drops. So certainly, I would say 2020 was going to be one of recovery, and hopefully it's just been pushed back by 12 months as a result of COVID.
And just on, you made a point just at the start there, with the Pendragon and the Lookers, and without going into details of either of them two groups, but groups of that size, how much of a influence does that have on the overall view of the sector? Because they are significant size groups within the dealer network, and obviously their results, I suspect, will have a significant impact or influence on the overall result.
Yeah, I'd say, Philip, but a significant impact, as you say. Certainly the largest 5, 6, 7 groups in the UK are significantly larger than sort of groups 10 down to 150. So they do have a real significant weighting. Obviously, Pendragon and Lookers had their own issues in 2019, and that's all been well documented, and hopefully they get it all recovering from that well into 2021. Yes, they do skew some of the results, but actually when we then take those top 5 or 6 businesses out, we still get a very good view of what the classic owner-managed motor group looks like, whether that ranges from sort of 500 million down to 100 million.
Yeah. So I presume then, and sorry to dwell on the point, but so when you're looking at these outliers to a certain extent, that you can look at it two ways then. So you obviously look at it with the outliers in that are those extremes, and then look at it without them in terms of the general health of the sector.
Yeah, absolutely. So that's why I said I think based on our report that's just been released, actually the true underlying return on sales is probably pretty much in line with 2018, which was about 0.8% return, so slightly lower than what it had been in previous years. But again, as I said, there was still good money to be made, by those groups with best controls and processes.
Yeah. And obviously within it, you make the point that the Motor 150 group is strong and resilient, as you were just saying there, in terms of when you remove some of the outliers, and you make a series of predictions, should I say, for 2021. Can you start with your view on the current and future consolidation trends that you're seeing?
Yeah, I mean, well, again, there have continued to be consolidation, hasn't there, and acquisitions. even in sort of post-March 2020, obviously it's been at a slightly smaller scale than in previous years. My take or my view is that consolidation will only further consolidation and acquisitions will only increase into 2021. I think there's probably a number of reasons why that is. In the short term, obviously there are potential tax changes that have been well documented in terms of potential changes to the capital gains tax regime. Obviously the manufacturers are looking at some of their networks and their strategy around their networks. And I think as well, the last 12 months, 10 months have been very challenging for everyone, and I'm sure there are groups out there that may have had enough and now decided, now is a good time to sell up and get out. I think overlaid with that, again, all you have to do is read some of the press and the announcements from some of the largest groups in the UK. These largest groups are or do have significant cash reserves at this moment in time and have got funding in place to allow future acquisitions. So my take is I think 2021 will be and will continue to be a busy year for acquisitions and consolidations.
Now, within the report, Steve, you talk about the sector adopting leaner and more efficient approaches. How was this accelerated by COVID, and how do you see that developing over the course of 2021?
So I think, again, in our Motor 150 report, we previously had noted that we saw the sector going through one of evolution rather than revolution. And I think if you think back to 2008, with the banking crisis, there was quite a lot of changes at that period of time in how businesses operated and cost base and so on. But I think the difference back in 2008 to 2020 was perhaps the technology was not quite there in terms of all the various apps and IT and what have social media compared to 2020. So that obviously is significantly advanced now in 2020 and 2021. So I think those businesses have really had to embrace this new way of working, remote selling, remote dealing with the customers and so on. And as a result, the digitization and IT infrastructure has been even more important and have been really at the forefront of how dealers have coped with COVID. And I think as a result of that, all the dealers have then looked at whether it be workforces, look at their practices, how they engage with customers. And it's just, as you said, that whole process has been accelerated, partly down to necessity through COVID. I think the biggest challenge now is hopefully when we get back to normal, which is hopefully sooner rather than later, is that all the groups and every business doesn't revert back to what they were doing pre-March 2020 and basically have the best of what they've learned post March 20 and still incorporate the best of what they did have pre-March 2020.
And what's your gut feel for that, Steve? Do you think that the lessons learnt will now be in place and very much sort of part of the way that dealers will operate post-COVID?
Yeah, I think they are indoctrinated, and I think it's not only from the dealers. I think it's potentially also from the customers as well. So, this we've probably done 2 or 3 years worth of progression over sort of that 10-month period. So it definitely has accelerated, no doubt about it, and hopefully for the better, and I'm sure it is for the better.
And sticking with sort of acceleration and evolution of things, and the electric agenda, is the big topic at the minute. And you say that the electric agenda will continue to evolve, but it will not have a significant impact in 2021. Now, obviously, the SMMT have recently come out with their forecasting for BEVs and PHEVs to account for 1 in 7 of all new cars registered this year, and that's up from 1 in 10 that we saw last year. What are your thoughts around that, and why you don't feel that this is probably the year for those vehicles?
Well, again, I think it's a slightly more of a slow burn. It comes back to that evolution rather than revolution point. There's no doubt electric and alternatively fuel cars are increasing, but I think if you look at the very short term in 2021, they will increase, no doubt about it. But I don't think it's going to be, when you get into a year's time, it's not going to be a massive game changer to the entire industry. I think it's more about, that ultimately people need to be, or customers need to be comfortable with the price point of those cars. And probably secondly, which again has been well discussed, is making sure that the infrastructure is in place, within the country to allow all these electric vehicles to be running on the roads and what have you. So I think it's still a relatively slow evolution rather than a mass takeover of electric cars over the next 12 months. But absolutely, that is on the agenda. That the percentage of electric cars is only going to increase over the next 2 to 3 years.
So you think it's due to being a push rather than a pull in terms of that
growth
I would say of so. EV, and without getting into the world of politics with the EU exit deal and trade deals that are in lots of discussions, there's obviously questions around supply and challenges there as well, isn't there, I suppose?
Yeah, absolutely. So I think they are going to become more prevalent. I just don't think it's going to be a significant game changer in the next 12 months. I think what is more, just as interesting is, and we note about it in our report, is about the ESG agenda, so the environmental, social, and governance agenda that all companies have to abide to, and that's going to be a bigger thing, or has bigger thing for companies to make sure they're abiding to in terms of their impact, on social mobility, on the environment, and good corporate governance. So that's a sort of a further. It's not really down the electric route, but it's the whole climate change agenda that is becoming more and more on companies' boardroom tables, so to speak.
Yeah, I mean, it's just, again, we've this week we've been looking at the Biden administration within the US and what that means for the UK trade deal and where the UK sits in terms of priority against the EU, as Obama warned, I think, on his exit speech, didn't he, around that the EU could become a priority over the UK on the agenda. So there's a lot to play out, I think, isn't there?
Yeah, absolutely. And as I say, it's not just about electric cars. There's a whole bigger piece, isn't there, in terms of the general economy and how people go about business.
And finally, Steve, one of the current unknowns, and this is something that Phil and I seem to be talking about most weeks on the podcast. One of the current unknowns is just how much pent-up demand there is out there for new and used cars, which is something that you've picked up within the report. When do you think this? Do you think this will be unleashed once lockdown 3 is lifted? What's your view on what this demand will actually look like?
Yeah, well, I'm sure all the dealers in the country, as we are hoping that when they reopen, it's exactly the same as of the 1st of June last year, which was just a phenomenal return to business, wasn't it, for everyone?
Yes.
I don't think all the clients that we've spoken to, since lockdown, if you'd said to them business was going to be like it was post-June, they wouldn't have believed you, would they? So the optimist in me is saying we hope it is as good as what it was in June. The pessimist in me is saying, can it really be that good again? But I think having said that, there are definitely indicators that it could be, just as strong. It's been, again, well documented in the press that the public and the UK public have built up significant amounts worth of cash reserves, haven't they? Savings, where they've continued to not been able to lead a normal life. And I think there was quotes of sort of well over £200 million worth of savings have been accumulated. So people absolutely are probably, or hopefully the majority of the population are in a better position cash-wise than they previously have been. They still can't go on holiday, or not in the short term. So hopefully that will point in the direction that there will be a strong bounce back. Whether it's as strong as June, I don't know, but we're all hoping it'll be a very strong bounce back. So ultimately, 2021 can almost be a year of two halves, so to speak. Certainly a slow start in terms of the first quarter, and then hopefully it can motor away from April, May time, as it did last June, and again have a very strong last 7 or 8 months of the year.
And if we do see a bounce back like last June, do you think it will be evenly balanced across new and used cars, or do you think there might be more demand for one of those sectors?
It probably depends. It depends in terms of the supply of those new cars. Obviously, a lot of the factories have been closed for significant amounts of time, and so if the supply of new cars come through, then I would like to think it will be both sides of the equation. If supply is harder to come about, used cars will continue to grow and grow and grow. And obviously, we've seen over the last 7 or 8 months again what's happened with used car prices, which continue to remain strong, which has again been good for the sector, isn't it?
Yeah.
Yeah, it's a difficult one to forecast at the minute, isn't it?
Yeah,
we don't know.
I feel sorry. I feel sorry for all the finance directors who probably forecasting sort of on a weekly basis based on when things might reopen. But I think certainly the indications are, and what certainly everyone is hoping for, is that it's again an equally strong bounce back whenever that is.
I think the positive side of it is there is an element of the consumer market that are there wanting to buy a car and ready to buy a car when they can do. There's end of contracts that need replacing, there's PCP renewals that need replacing, there's fleet and contract business to do. So it feels that whether that's new car business or used car business, that there will be an element of whether it's bounce back, whether it's pent up, whether it's revenge buying, whatever it's formed as. I think whether it be as strong.
And I think it's still amazing. Even though car showrooms are in effect closed, so to speak. Just the level of vehicle sales that have happened. In January.
Yeah, you look at it two ways, can't you? You can look at a 39.45% drop, or you can look at a 60.5% of activity still taking place in the month of January. So there's two ways of looking at it, that actually, we're not in the position we were in that April-May period when it was very, very small activity that took place at all. Yeah. But there is business being done, which is the positive side.
Which is, in challenging times and showrooms being closed, I think it's got to be encouraging, and hopefully that will only just lead into that pent-up demand when we fully reopen.
It's been fascinating sort of talking to you about the content within the report, and anybody listening, we advise them to have a look at the report in detail. And really, essentially looking at resilience in the sector. We've bounced back and shown resilience many times, haven't you? You referred back to the 1960s. I think some people will refer further back than that. I suppose it's where you finish doing your comparison. But in our world, how do we compare now with 2020? It's we're in interesting times, but as you say, more of an evolution than a revolution with EV. But we know it's coming. It's just at what speed of pace that comes. So fascinating speech to you, Steve, and for me personally, thanks for sharing your insight today.
Thank you for that. Thank you, Curtis.
Yeah, no, thank you very much, Steve. And before you go, can you just tell the listeners how they get hold of the reports?
So they could go on to the BDO website, which is bdo.co.uk. They could email me, which is steve.lebas, which is LEBAS, at bdo.co.uk, or go onto my LinkedIn page. Again, there will be a link to it on there as well.
Yep, great. And it's a downloadable PDF.
Downloadable, yeah, absolutely.
Yeah, brilliant. Look, many thanks for joining us today, Steve. It's been great to have your insight on what's been happening and what's likely to be happening over the coming months.
Brilliant. Okay. Yeah, no, good to catch up with you as well, Curtis and Philip. Thank you very much.
Excellent. That's all for now. You've been listening to this special Motor Trade Radio podcast interview. If you found it useful, then please like and share on social media, as it's important during these times for the dealer community to share insight, experiences and best practices. We'll be broadcasting more midweek special interview podcasts over the coming weeks and months. Many thanks to you for listening and supporting the podcast. Philip and I will be back with the industry headlines on Saturday. Until then, stay safe and well.